I want to see like a big clapboard that says action.
You've landed on the Mortgage Life podcast, where we strive to bring you mortgage-related info that's easy to understand.
We have conversations with market experts to bring you timely updates, because there's one certainty in this industry: things change.
I'm Mindy Bodwin.
And I'm Pete Solomosi. Welcome to the Mortgage Life podcast.
Welcome to the Mortgage Life podcast.
Yes. Welcome to 2025.
Yes. And it's that time of year, which is cold and flu season, which I'm suffering from. So Pete will hopefully do most of the talking so you guys don't have to hear me coughing. But also, what other time of year is it, Pete?
Well, it's my favorite time of year, which is BC assessment and mortgage statement time of year. Yeah, okay, maybe I made that up. It's not my favorite time of year. It kind of is because of ski season. That's one of my passions. But yeah, it happens to coincide with the time that BC assessment and your mortgage statement come out. So BC assessment is it almost virtually comes out on the 1st of January. So if you actually log on to the website bcassessment.ca, you will find your BC assessment right there, right on the very first of the year. And we wanted to review these two things because we always get a lot of questions on the assessment and whether it's an appraisal. We also get questions on your mortgage statement. Why do I need it? And we thought we'd review this. But I want to take a quick note back that when we started this whole adventure down podcasting in the mortgage life, the very first episode was our BC assessment episode with Amanda Wilms from BC Assessment. So go back and have a listen to episode 1 because it's actually pretty informative and it's not necessarily time bound. It's a lot of stuff is still relevant to today.
Absolutely. Amanda goes into a lot of detail about what it is that BC assessment does to obtain those valuations. So definitely interesting.
Right. And then the second thing that we want to chat about today is also the mortgage statements. And I was going back in our episode list and I was looking back to see exactly when we did this one. And it happened to be the second episode. So episode 2, if you follow along from episode 1 to episode 2, you'll actually find that we discuss the mortgage statements and exactly what you might find on those mortgage statements. Today, what we're going to do is we're going to talk about those two things and just review why they're important and what you really need to do with them this time of year. I will get right into it because I know I don't want to make Mindy cough here. Now she will. Okay, so let's get into it. If you go back and listen to Amanda in our episode 1 talking about BC assessment, she does go over a lot of really cool stuff, like how do they determine values? What exactly are those values used for? And when we had that conversation 3 and a bit years ago, we had seen property values very steadily increase over many, many years. So we were of the mindset that, gosh, we're in BC. We're never going to see property values go down. So we kind of always talked about how you're going to probably see it go up. Well, interesting. After that episode, we had a very, very rocky next few years. And so we actually did see some property values go down. I think they actually went up, spiked quite a bit, and then they came down. And now they've normalized for the last year or so.
It is interesting, though, just as somebody who gets a few property tax assessments, even in the same municipality, the different property types will adjust depending on, a condo will change differently than a single detached house, differently than a place in one neighborhood over another neighborhood. So again, it shows you that there's more going on behind the scenes with BC assessment. There's a lot of different factors that play into these valuations, even more so than the broader economic conditions.
That's right. And those are really interesting points. And again, one of the big questions that we have is about that assessment and whether it portrays the proper value of the property. The reality is that the BC assessment, it looks backwards. It goes back and says, hey, what was the general assessed value or the kind of relative value of your property on July 1st of the prior year? So the assessments that we would have just received in January of 2025 reference the value of your property on July 1st of 2024. So they are kind of a little bit dated, but the whole point of those assessments is to create an entire roll of assessments for a municipality, various areas, and those rolls end up forming the basis for the municipal taxes that are charged in that area. So this is the kind of main point that I wanted to get across is check your assessment to ensure that you think your value is appropriate, whether it's gone up, whether it's gone down, whether it's stayed level, because the reality of the tax situation is if your property has gone up by the same number as the average of the roll in your municipality, I can't say that, in your
It's a tough
municipality,
word.
if it has gone up by the same number, then you will most likely see that your taxes will either stay the same, or if your municipality has a tax increase, then you would increase by that number. If if your assessment has gone up more than the average price of those properties in your area, you'll most likely see a larger increase. If your tax value, why do I want to say tax value? Your assessed value has
Because
gone
that's what the
down.
tax is based
I
on.
know, right?
It's part of
If
the
your
formula.
if your assessed value has gone down compared to what everything else has done in your municipality, then most likely you'll either see a lower tax increase or you might even see your taxes decrease. So hopefully you're able to wade through that.
And it is interesting to look at the assessment, especially when you've just bought a home. If you purchase the home for say 500,000 and the tax assessed value is 600, you can go to BC assessment and have them do a sort of side assessment of your property. You can contest the valuation, and you might say, well, why would I do that? Now they're saying my house is worth 600 and I only paid 5. Just remember, it's not an appraisal. It is what BC assessment uses as the taxation value of your home. So if your home is valued taxation wise higher than what the market says, well, bring it back down to the market level because you'll save yourself an excess amount in property taxes. I've actually done that in the past with one of the properties I bought in the interior. And sure enough, we contested the tax value. They brought it down to market value, and it saved us a lot of money in property taxes.
Absolutely. That's a really good point. Um, and if you go back to that episode with Amanda, she talks about how they come to the valuations.
Mhm.
But part of that valuation process is the feedback from the homeowners. So if you don't feel that the valuation properly reflects the value of the property, you do have a period to dispute it. Typically, that's January 1st to January 31st. But yeah, check with them. They may be able to do something for you in terms of that property value. The only other last thing that I want to talk about on BC Assessment is if you check out their website, bcassessment.ca, the basic information that they provide, so you just have to enter your address. They'll provide you with the property value this year. They'll compare it to the value last year, and that's kind of it. But you'll see a little spot at the top of the screen that says log in. Click that and create an account. It's absolutely free. It just gives you access to more information. So if you log in, you're now going to get 5 years of history. And so that just gives you a better background as to where the properties come from, where it's going, gives you a little bit more detail about the municipalities and what their average valuation is over that period of time as well. So you can get a little bit more detail if you do log in.
Good to know.
Yep. One last thing. Maybe I already said last thing. So this is the second. This is the PPS.
The very
If
last thing.
the very last thing, if you do scroll down on your BC assessment page, right to the bottom, you'll actually see 3 tabs. One shows the neighboring properties. One of those tabs shows you recent sales. So if you want to see what properties around your home have sold for in the last little bit, you'll be able to click on that and see what those properties are selling for compared to their actual assessed value. Again, it's a nice little data point if you're looking to sell or if you're trying to see whether or not your property is actually valued correctly.
Wow, it's like free access to MLS.
That's right. We don't have free access, but this is almost as good.
Yeah, almost as good.
Anything
All
else you want to
right.
add, Mindy?
No, I think we've covered it, but I guess the big point here is just it's not just a useless piece of paper that you're sent in the mail. The BC assessment is full of information and really important to ensure that it is accurate because it does end up translating directly to your pocketbook. So,
That's right. And speaking of non useless pieces of information and papers that you might get at this time of year, the second thing you might see at this time of year is a letter from your lender. And if you get this letter from your lender, most likely at this time of year, it will be your mortgage statement. So that mortgage statement will contain a bunch of information. And again, if you want to hear our take on the mortgage statement, go back to episode 2 where we talk more thoroughly about exactly what you'll see in that mortgage statement. But essentially, it gives you all the details of what happened in the past year on your mortgage. So it'll tell you how much you made in payments. It will tell you what your interest rate is. It will tell you how much interest was actually paid as part of those payments. So it gives you a whole ton of information. And I wanted to go through why that's really important. So, one of the big things that you want to look at that for, again, very much like the BC assessment, is just checking to ensure accuracy. Because often we kind of assume that lenders are absolutely brilliant and they'll never make a mistake. But sometimes, every once in a while, especially in our industry, I've seen it where we see an error on that statement. So the interest rate might have changed for whatever reason. I can think of a whole bunch of reasons why the interest rate might have changed. If you have a variable or an adjustable rate mortgage, you'll have seen rate changes. But that's the kind of thing that you want to check. So check your mortgage balance, check the interest rate, and check to see that everything is accurate on there.
another important piece for accuracy is just checking the name, making sure that it is your legal name on there, not a shortened version or a nickname or something. Because when we're so our mortgage brokers, so you've gotten a mortgage and we're asking you for your current mortgage statement, there's been quite a few instances where the name on the statement is actually different than what is on title. So just that's one of those accuracy pieces that I've noticed in my practice. But I must say that the mortgage statement is got to be one of my favorite documents as a mortgage broker. It's just so chock full of information for us. Um, Additionally, as a real estate investor or even a small business owner, that interest expense that's on there, that is gold. Again, that's a direct translation to tax savings and money back in your pocket. Pete, do you want to explain a little bit more?
Right. So as part of that statement, you'll find that it will indicate how much interest you paid over the year. If you're either one of those things that Mindy mentioned, so if you're having real estate investment, so you've got a rental, whether it's a basement suite or it's a separate rental, you'll really want to make note of what interest you paid because as part of your tax filings for that year, your personal taxes, you're going to be creating a statement of real estate rentals. And on that statement of real estate rentals, it will actually ask for how much interest was paid over the year for the mortgage. So that's part of the calculation. And not to get too deep into the accounting side, but those any interest expense that you've spent is deductible from the revenues that you've earned. So it essentially reduces the amount of tax you pay. Big deal.
It's a huge deal. Yep.
For sure. And also, a very similar thing if you operate a home based business, that part of that home based business is the business use of home expense. And again, that interest expense will flow into the statement of business activities for your home based business. So lots
Yep.
of fun stuff there.
And this kind of opens the door to a broader look at this. And so this isn't something that we would have touched on when we first introduced tax assessments BC assessments. Why do we always want to talk about taxes? It must be tax season.
Mhm.
And mortgage statements is this financial planning piece. And so some of the like sort of the tips and nuances that we've mentioned really what it's called is financial planning. We're always thinking about right now and how expensive life is, or inflation, or oh my gosh, look at the price of bananas. But it's really important to get ahead of that and to be a smart financial planner, to be in control of what you're doing with your finances.
Totally. And part of that, um, kind of look at the finances, the cash flow planning, the financial planning, is taking a look back at what happened in the past year, whether that was expenses that you took in for Christmas shopping, if you spent a little bit too much on your credit card, whether it was purely looking at exactly what your current mortgage is, or even looking forward to what it potentially will be at renewal if your renewal is coming up. You can look at the cash flow aspects and say, hey, I'm spending X dollars on my credit card to make sure it's paid every month. I'm also spending on my mortgage. Like, is there a way to make this work in terms of cash flow that's a bit more advantageous for me? And that's where a good conversation with your mortgage broker, Mindy, or I, we are happy to go through and run through what that might look like, whether we're doing a refinance to bundle in a bunch of debts, or simply re-amortizing your existing mortgage to push out that amortization to lower those monthly cash flow payments. Those are all things that are really worthwhile at this time of year when you're looking back kind of at what you did and looking forward to what can be.
Absolutely, and we've seen, a decline in rates from 2 years ago. And as I've been running the numbers for the past few months, there's many cases where there is a significant cash flow savings. And again, it's just grabbing a hold of that piece and realizing that if things are uncomfortable, it's difficult, you know what, there is a way to use these tools to help yourself get forward. So
Absolutely. And I do want to finish on one final thing, which is if you're worried about what things will look like as your mortgage comes up for renewal in the next year or so, and your current rate is, maybe it's really phenomenal, maybe you got it back in 2020, 2021, 2022, when rates were down in the ones and twos if you have a fixed rate, and you're worried that by going up to a rate that's in the fours that your payment might double because the rate's doubling. Well, have that conversation, because that's actually not how it works. Your payment doesn't necessarily double with the rate doubling. Because things are amortized over a longer period of time, there is a much more gradual effect to that increased rate. But it's certainly worth gaming out a few different scenarios, looking at what is right now, what could be, and whether it's a refi or it's a reamortization. All sorts of options that are worth considering and using as part of your financial plan.
especially with external debts, if you've accumulated external debts and you have that low mortgage rate, I can almost guarantee you that bundling that all together actually does end up being um, much more comfortable cash flow wise. And we're seeing it time and time again.
Yeah. So have that conversation. Um, 'Tis the season for documents, which is our favorite time of season, and also a really good time to just be curious about what could be.
This is The Mortgage Life.
We look forward to continuing the conversation.
So come back and listen.